Hi, everybody. Welcome to Hands-On How to Survive and Thrive with Gauvreau Associates. I'm Alana, the Operations and Events Manager at the Innovation Cluster. For those of you that don't know, the Innovation Cluster is a not-for-profit organization that works with startups working specifically in technology, but all of our workshops are open to the public, such as this one. We are also a part of the Team PTBO group, which includes some of the organizations that are on your screen right now. Also featured on your screen are some of our partners. So again, thank you for joining our virtual hands-on with Bob Gauvreau of Gauvreau Associates. So some of the learning objectives for today are the Survive to Thrive model for business, how to maximize cash resources, how the financial model works, and how to become a leader, planning ideas and opportunities, and what financial and government resources are available. There also will be a Q&A at the end of the presentation. I will enable the chat feature at that time for you to ask your questions. And there will also be a survey sent out to you after this session. So you can let us know what you liked, what you didn't like, and what we can do to improve. So I'm going to hand it over to Bob and he can get started.
Awesome. Thank you, Alana. And it's interesting because this might be the first Zoom meeting where I'm not seeing any faces. I would love to see, I'm seeing lots of friendly names, but would love to see friendly faces if you guys were open to that. But let me know if that's something that you're open to. For those of you who don't know me, my name is Bob Gauvreau. I am the founding partner of Gauvreau Associates Chartered Professional Accountants here in Peterborough, just across the street from the Innovation Cluster. And we are obviously a very close partner with everything that they do. And certainly we are dealing with times that many of us have never seen. Obviously there's been different economic upturns and downturns over the history of being in business and being an entrepreneur. But certainly there's been nothing, at least in my lifetime, where we've dealt with economic uncertainty and the inability to open our doors to the public like there is right now. So with that said, I've been working with a lot of really brilliant people over the last couple of months. Hi, Dylan. How you doing? I've been working with some really awesome people and really brilliant people from around the world, creating financial models that will help people understand how to face challenges at certain points in their business. And they've kind of inspired me at this point to create an economic model or a business model that I'm going to share with you guys that is really the how to survive and thrive during uncertainty. So we've created this model around entrepreneurs and small businesses and exactly what we need to do. It's a 3-step process, so I'm going to get going on that right now with you guys. So I'm going to start sharing my screen here. And here we go. So what does it mean to survive and thrive? So we're going to talk about over the next, I'm not sure my timeline here. I'm going to stay on as long as you guys need me to. I know a lot of people might have a lot of questions. We're certainly going to be talking about some of the government assistance that's available, at least what we know of up to this point. But I'm going to start off with the model and I will stay on as long as anybody has any questions. So I'm just happy to help. So our agenda, we're going to talk about the Survive and Thrive model in times of uncertainty, which includes understanding how to manage your cash resources, which is super important. I'm going to get into much detail on that, how a financial model works, and how times of economic uncertainty might change how your financial model works inside your business. So we want to understand that very thoroughly. And then once we've repositioned, we've pivoted in our business, what do we need to do to plan to thrive in this time of uncertainty and to be prepared for the floodgates that are going to open up once we return to work and all of the work that we could have done is still sitting there and waiting for us. I also want to talk a little bit about how we lead our teams in times of uncertainty. And then I'm going to go over all of the resources available. So I've kind of teased it out. Resources available are going to be at the end. You have to listen to my model first. But the model is going to be very much built around what we need to do in our business right now. So first thing I want to share with you is the survive and thrive. So we've created this. Obviously, on the one side, you can see cash. We're going to talk about all the steps related to why we need to make sure our cash resources are full at this time. We're then going to talk about how to reset our financial model. And then we're going to talk about how we continue to plan and thrive for our new certainty in the future. So the first thing I want to talk about is cash flow. So before I get into how we deal with cash, I just want to share with you the importance of cash and having cash resources in your business. And we've all been there, right? 92% of all businesses, entrepreneurs live paycheck to paycheck or week to week in their businesses. So that's a lot of people. And making sure that you have sufficient cash resources will alleviate a lot of stress and discomfort inside your business. So what we do know is that when you don't have cash resources available in your business, you start to realize levels of frustration, right? The frustration that you don't have resources that you can invest or spend in certain areas, and it becomes extremely frustrating as a business owner. Then all of a sudden, when we're frustrated, we start having uncertainty, and this is what I feel like some of this environment is creating for us. And once we have uncertainty in our business related to our cash flow, we start to panic, right? As soon as we're uncertain if we have enough cash resources available, we start to panic. And when we panic, we start doing desperate acts. And that's borrowing money from people we shouldn't be, paying high interest loans, getting ourselves into a position only because we have to in order to survive. And then ultimately, once we go down the downward spiral of not having available cash, the ultimate demise is business failure. And I just want to make it clear to everyone that 82% of businesses that fail do so because they don't have sufficient cash resources in their business. So here's the good news. We are going to talk about exactly how you stockpile your cash, you create and increase your safety net in your business, and we ensure that not only do we eliminate the downward spiral of cash, but we have cash available to take advantage of future opportunities that will present themselves in our business. So before we understand exactly what it is that we can do inside our business to increase our cash resources, we need to understand what impacts cash flow inside our business. So there are three things that really increase the benefit of having cash or increase our opportunity to put cash in our bank account. So the very first thing is profit. Now, although profit doesn't equal cash, if we're collecting our profits accordingly, we will continue to increase our cash resources. So if you're losing money, although you still can have positive cash flow with losing money, what we do is we give ourselves a better opportunity to collect more money and generate more cash resources in our business. Decreasing non-cash assets. So looking at accounts receivable, inventory, assets, long-term assets, investments, anything like that. When we decrease those assets, we are actually increasing the opportunity for more cash flow. For example, accounts receivable, many of us have accounts receivable in our business. When we go out and we collect accounts receivable and the people that owe us money, that number decreases. That's because we're getting more cash resources in our business. And the last one is increasing liabilities. And this one is probably the most overlooked in our business. When we increase our liabilities, we actually increase our cash resources. So for example, accounts payable, if you defer payment to a vendor, you continue to have money coming in from your regular operations. By putting off that cash outflow and paying that out to your vendors, you're ensuring that you have additional cash resources in your business. So now that we understand how cash gets into the business, let's look at some opportunities for stockpiling cash in our business and improving our cash management policy inside our business. And truthfully, guys, if our doors are closed, now's a really great time to be planning out the next 6 months, 12 months, but also tightening up on our policies and procedures related to operating our business. So the very first thing that we should talk about is the cash management. So here are some ways, some tips for each and every one of you to increase your cash resources that are available inside your business. So the very first thing I talk about is cash collection and acceptance. A lot of people avoid accepting credit card payments inside your business, or high rate credit cards like American Express. Looking at cash collection, even though there's 2.5% on some of the highest, maybe even 3% rates on cash collection right now on an Amex, 97% is much better than 0%. So what we need to do is we need to open up the avenues and make it really easy for our clients to pay us. So again, credit cards, e-transfers, online payments, direct transfers, check, cash, whatever it is. Right now, if we want to increase our cash resources, we'll make sure that we're open to accepting all forms of payment. I mentioned this briefly, accounts receivable management. Right now is a really great time to go after our accounts receivable. One thing that I've been saying to a lot of our business owners is, there's many people out there in today's economy who this downturn or the shutting of the doors isn't impacting their financial position in their life, right? All of the retirees, they've got fixed pension, they've got the same amount of income coming in as they did a month ago. That really hasn't changed, with the exception of the markets dropping, maybe looking at some of their net worth. But those clients still have access to the same amount of cash and resources. So making sure that if that's our demographic, that we're going after and aggressively collecting the money that's owed to us at this point. Certainly, even if we aren't delivering any revenue going forward, if we're able to collect our receivables, we're able to get more cash resources in our bank account that will help us get through this uncertain time. Accounts payable. So looking at deferring payments, we'll talk a little bit more later on about the government incentives and the banking institutions, some of the flexibility they've provided. But with your accounts payable management, making arrangement with suppliers, with landlords about deferring payments right now, making sure that you have the available resources inside your business instead of paying it out to vendors, if you can come up with a resolution. What I can tell you is, from my experience, when people reach out to me in advance and say, hey, you know what, I'm having a bit of a hard time, but can I pay you in 3 weeks, or can I pay you over 3 months, 3 equal payments to help me out? I'm more than flexible to make sure that, that's an option for people. And I feel like we can all do the same thing with the businesses that we're working with and with our vendors. Another interesting cash management tool is what I call moving the payments up. So a lot of businesses charge at the end of delivery. So, and I know, my own business is not very good at this. I need to practice what I preach. But what we do is when we do work for somebody, we invoice them and then we collect the money. So moving the payments up really means, instead of collecting cash after you deliver the product or service, moving it up towards before you deliver it. And even better is moving it at time of acceptance of the job. So instead of collecting cash at the end, moving it all the way up to in front of before we deliver any service or products to our clients. So some ways that we could do that is either accepting full payment before we deliver, accepting partial deposit, selling gift cards is a great way to collect money up front before you deliver. Especially right now, if we're looking to increase our cash resources, we could go out and sell gift cards or future projects and collect the cash now to make sure that we have the increased cash resources we need. One area of business that I see quite frequently that people don't take advantage of is financing. And a lot of the reasons why is because people are afraid of debt, or don't really enjoy taking on additional debt or owing people. And which is totally fine, and I respect that completely. But one thing that businesses do is, when we're operating and we continue to make profits, let's say we're making $100,000 profit this year, but all of a sudden we need to buy a new piece of equipment for $50,000. Well, if we go out and use the operating cash flow from our business to go out and finance that equipment, we don't have available cash resources in our business to maybe expand or grow or add to marketing, because we've used a lot of our resources in a capital nature. So one thing that we certainly recommend, if you've got capital assets right now, that the bank could attach security to, we could definitely go out and get financing related to those assets right now. Again, a really great way of accumulating cash resources in your business right now. Also looking to the banks right now, looking at working capital and proactively requesting payment relief and additional financing related to working capital. So can we extend and ask for increased limits on our credit cards, on our lines of credit, making sure that we have those safety nets there in place should we need access to that cash. Another thing to think about is if you've got a business that has inventory, let's look at the bottom portion of our inventory right now and let's figure out a way that we liquidate this off. How do we liquidate old inventory to accumulate some good cash right now that we wouldn't otherwise have access to? And to be honest, in the current situation, having inventory lying around isn't overly useful to us. So if we look at, liquidating even our current valued items, we can gain access to cash that way as well. That might include having to sell things online and getting delivery companies to set it up, but that's part of pivoting in our new economic climate right now and looking at how we pivot to come up with a new strategy to gain those resources. The last one I want to talk about from a cash management side is selling off non-essential assets. So perfect example, I was talking with a client this past week. He was an electrician or is an electrician, and he has decided that, they have one extra vehicle that they didn't necessarily need. At this time, he went out and he sold the truck and got the cash resources for that truck. Again, he was someone who didn't finance the truck. So he got cash resources in for an asset that wasn't being used right now. And in the future, if you need to go out and buy new assets or finance new assets, that's okay. But right now, maybe we need access to those cash resources. So from a cash management standpoint, again, not specifically talking to some of the bank resources that are available, because I will touch on that in a few minutes, but just looking at your existing financials, your existing balance sheet, and figuring out how we gain access to as much cash as we possibly can. Outside of the cash management, I know I briefly mentioned that, increased profits are a good way to gain access to cash. We have to convert it to cash, but higher profits certainly give us access to that. One thing we need to be doing in this position right now is reviewing our fixed expenses. And our fixed expenses are the same expenses that come out on a monthly basis, almost on a contract. I know many of us have software subscriptions or memberships that come out on a monthly basis. So what we need to do is review those expenses. And I know for my own example, I have a few CRM platforms that do different things for me. Could I at this time figure out how one of them does all of those things for me and eliminate a $300 a month expense? Absolutely. So those are different initiatives that we all need to look at inside our business. We also want to look at other expenses that aren't necessary for the next 6 months. If we aren't going to invest in the opportunity that's going to come up in the next 6 months, maybe we look at some of our marketing costs or again, some of our membership costs, and we look at scaling those back because we aren't delivering right now. Strategically though, making sure that we still spend our marketing resources because we want to be open and ready for business on the other side, which we'll talk about in a few minutes, but reviewing those current expenses and eliminating non-essential expenses for our business right now. Hopefully that's valuable related to cash management and how to accumulate cash resources in your business. So I'm going to talk a little bit for a moment about how a financial model works. And I'm just going to switch out of PowerPoint here and go over to a trusty Excel document. And I'm going to explain to everyone how a financial model works at a relatively high level. So here's my example, how a financial model can change. What we're going to look at is right now what a financial model might be in a business. And then what we're going to look at is how the economy and how our business slowdown has potentially changed our business model and the impacts it can have if we don't make adjustments quickly. All right. So in the current business model, we have a business that has $1 million in revenue. Our purchases, we're buying and selling items which may or may not apply to you, but cost of goods sold and variable costs will apply to everybody. So these costs essentially are incurred directly related to delivering this revenue. So in this particular business example, we're buying and selling things. We have vehicle expenses related to delivering this product or service, and we also have payroll costs related to delivering and driving this business revenue. So right now, we make 45 cents on every dollar that we deliver in revenue. Okay, pretty good business. At the same time, we have fixed expenses that are average on a monthly just shy of $30,000, and which are 35% of our overall revenue. And after we pay for our fixed expenses, our net income is $100,000. Pretty simple business model, just knowing that these are expenses that just continue to incur inside a business. They don't fluctuate if we sell an extra 1,000 units or deliver an extra 1,000 services. These expenses do. They go up and down as we continue to deliver. So here's what's happening right now. Inside this business, if our revenue drops, let's say it drops 40%, okay? So we're going this times 0.6. That will take us down to $600,000 in revenue inside the business. Well, what we know is as we move down this model, we're not having to buy and sell the same amount of product or service anymore, right? But what happens is as we continue to sell, even though it's dropped, the percentage of our cost remains the same, right? So again, our margin on this particular purchase is 80% because 20% of our costs are related to purchases. All right, that will continue to go up and down. Vehicle and travel, well, here's the thing about vehicle and travel. If we're not eliminating some of the ongoing payments related to vehicles or lease costs related to vehicles, and we continue to have surplus assets sitting there, this cost won't really drop. It might drop a little bit because maybe we're going to reduce our fuel costs that's going back and forth. So let's say that it drops even 20%. So even though our revenues dropped 40, we're going to drop this 20% because we still have the same amount of vehicles. Now, here's the biggest problem. What happens is, as we grow a company, we add resources, which are people, to help deliver these services and products inside our business. But what happens is, and we look at them as a variable cost, right? Because the more we grow, the more we add people. And the more we add people, the more capacity we have to deliver. What happens in this case, if we get a sudden drop in revenue and we don't address the surplus in staffing costs, you can see the result of what's happened here inside our business. We went from having a business that made $100,000 a year to one that's losing $210,000. And this is a problem, right? We can't be in a business that's losing $210,000. We need to make these changes quickly, right? So if we go and we look at this side again, wages are 30% of our overall model. Let's just say we're going to change that as well. We're going to make active decisions that we have to reduce our payroll and reduce our staffing so that we keep our model in place. And because we've been able to reduce our vehicle expenses as well, we've continued to make a profit. Now you can see the difference here. In the current model, our profit's $450. When we reduce our revenue, our profit goes down to $260. This is another problem because right now, all our regular expenses from month to month, including rent and insurance, they aren't changing, right? They don't go down. And what's happening here is that we're still losing significant amounts of money. So when I was talking about a few minutes ago, having to look at our fixed expenses, we need to take a real good long look at our fixed expenses and eliminate anything we don't need. Otherwise, we're going to find out that our financial model has changed and left without us, and we haven't pivoted in our new environment, and we're losing money. So we have to be very aware of how this financial model works, how characteristics like direct costs, variable costs have changed, and have maybe been recharacterized as fixed expenses, and how we need to look at our regular expenses that are going out and determine a way that we can eliminate them so that we can profit in the future. Again, this is looking at the future model, and we need to come up with a plan to eliminate this so that we can all of a sudden become profitable again. All right? So just be conscious that your financial model might be changing. We need to be very aware of it, and we need to take action on how to right-side our business. I'm going to head back into the PowerPoint here now. So that was talking about our financial model. So here's what we need to look at now. Remember, our model had three components. It talked about making sure that we had available cash resources. It was talking about reviewing your financial model, making sure you understand the expenses and the profitability of your business to make sure that we're making the necessary changes now to ensure that we're ready to go for the future. All right, so now here's what we have to do to plan to thrive and to be successful, right? So we've got the cash, we've reviewed the model, and here's what we need to look at now. So all of a sudden, we need to have a new vision for our business. Even though we might be doing the same delivery and the same product, the same service inside our business, we need to understand what our new goals are. What are our new goals in our business? What are our new targets? What are our new fixed expenses? What are our new profits, our profit margin? How does that look? We need to understand these key financial ratios inside our business so that we can understand how we move forward and still become financially successful. We look at our new model, right? We eliminate any variable costs that have all of a sudden become fixed. We adjust our staffing as is necessary. I'll talk about that in a few minutes as part of being a leadership council for your business. But we're looking at this model and we're saying, okay, in this new model, this is how we're going to make money. And it could very well be that the future is very, very positive, and that as soon as we're allowed back in business, there's going to be an overwhelm of new business that comes in. And if that's the case, maybe we're looking at getting all our staffing and our resources in place so that we can handle an increased growth as soon as we turn this back on, right? Because that's a real high likelihood. As we get back into business and the doors open in the near short term, hopefully, that we have those resources that we can deliver even greater revenue than we were planning on. So we could have a real great opportunity for growth in this. We also want to look at areas of investment. So if this is a time where we can really capture our audience and those people that we can add value to, you know, if I'm thinking of the construction world, this might be a really great time to go out and get new projects, line them up for the summertime, and maybe marketing is a good area to focus on spending right now. Maybe some of your competitors aren't going to survive, and we can jump in and increase our market share by doing really good marketing that's tailored towards the current economic situation. So areas of investment there, you know, strategic work, and I think areas of investment also mean areas of planning. So making sure that you're spending the time that you have available now and planning for the future of your business. Prediction. This means let's go out and figure out, you know, we don't know, we're uncertain of when we're going to go back, but let's draw a line in the sand and say it's going to be June 1st or May 1st, right? Let's draw a line in the sand and say, okay, as of right now, if we're planning for a May 1st, what does that look like? What do our May targets look like? What can we predict our May sales are going to look like? What resources are we going to need at that point, right? We've shut everything down now to save cost. What resources are we going to have to bring in and at what time so that we can predict that and ensure that we're well planned out to take advantage of the opportunity once this is over. At the same time, we want to benchmark this. So once we've predicted it, let's put in a benchmark, which we refer to as budgets or in forecasts. So get those numbers in there, get those targets in there so that we can look at what we need to accomplish and we can tell if we're on the way to track those results going forward. And then the last part is execute. So again, we need to pivot, we need to review our model, we need to implement new strategy in place, we need to get ready for the future, understand what sort of future revenue looks like inside your business. And then we have to act on it. We have to be ready to go as soon as we're available, as soon as the economy opens back up, as soon as we're allowed back out inside our business. Let's get ready to take full advantage of the opportunity and the willingness for people to spend resources that they've been holding on to right now, so that when everything opens up, we're good to go. So now I want to transition into what leadership looks like right now. And to be perfectly honest, this is a time of leadership that none of us have seen before. But it's a very important time in this uncertainty that the teams we're leading, we're providing some form of certainty to. All of the families that work for us, the employees that work for us, our suppliers, our vendors, our customers, those people are all looking to us for leadership and to see how we're going to react to the current situation. So I've pulled together a few things that I think are very important as far as being a leader in an entrepreneurial business right now. Like I said, providing certainty and reassurance to your employees. So looking at it and going, you know what, even though the certainty might not be very good right now, which might mean laying people off, if we haven't already, it might still be looking towards that, at least giving them certainty. They're not sure if they're going to have a job or not. You can at least provide them information and say, you know what, this is what we have to do right now. These are the decisions we need to make right now. And here's the resources that you have available to you, so that they know what they're dealing with. Employees who aren't sure whether or not they're going to have a job, in the short term, is something that's causing a lot of stress and anxiety in their life. Providing certainty one way or another will certainly go a long way. And I think, from being a leader, we have to come across, even though, things might be going on in our heads that, there's absolute chaos and we're uncertain in, different ways that we need to lead in the direction of our company. But what we need to do is relay a very clear, calm message to our employees, to our teams, to our customers, that we will be there and share with them what your plan looks like. This has been the hardest one for me over the last few weeks, and it's around making difficult decisions now. Now, fortunately for us, as of right now, we're an essential service. Even if we aren't an essential service, our employees can still, we pivoted very early and pre any of the COVID-19, and we had a virtual office set up that everybody could utilize. But, we've been lucky and very fortunate that we haven't had to make these difficult decisions, but we've been working with a lot of business owners who have. And the challenge has been, when we look at that financial model, like we were just looking at a few minutes ago, if we don't react to eliminating some of those costs inside our business, there might not be a business to come back to, right? So it's very important that we take active steps right now and make decisions right now that will be in the future benefit of the company and will be a future benefit to the employees and the families that work for us. Because if we can position our company in a good spot so that when we're back, they have something to come back to and they have opportunity there for the future. So although it's been extremely difficult for many people, we need to make difficult decisions now so that we can put the company in a good position to recover from, this economic downturn, I'll call it, right now. And so we're ready for the future. Providing guidance. So one thing that, we've been very cautious of with our team is making sure that we reach out on a daily basis, talk to everybody, see how they're doing, see what help that maybe you can offer them, see what guidance they need. Again, being that calming leader right now that everyone needs, that everyone needs you to be, is super important, because it allows everyone to continue to focus on the task at hand. Again, having a little bit of certainty as to what's going on the day-to-day, and knowing that you care about them, right, is super important from providing a guidance and providing leadership. And then share with them the plan. Because here's the thing, if you don't have a plan on how to react to this situation right now, you need to figure out what your plan is, right? We need to get those cash resources. We need to understand our financial model, pivot, change our strategy, and implement and execute on a plan. And share that plan with everybody, right? They feel like they're involved in the process, and they understand, that unfortunately our government, due to, the safety of the people who live in our country have had to shut doors. And, people understand that, they see that, but what they need to see is that you care about them and that you want to lead them and provide them opportunity in the future. All right, so this is probably the part that everyone has been waiting for, is to get a good understanding of what resources are available. Now, I checked at 1:45 when I got on here, and I know a big question is going to be related to the 75% wage subsidy, and I don't have all the answers I would love to have because they haven't released it or hadn't as of 45 minutes ago, but I'm going to go through with you what I do know right now. So last week, or maybe the week before, the government announced that there is $27 billion in aid and $55 billion in tax deferrals that are going to be made available to all Canadians. They talked about a wage subsidy. At the time, it was 10% of payroll, up to $25,000 per employee. So if you were an employer who had employees and you were continuing to pay them and you hadn't laid them off, the government was going to give you a 10% payroll incentive to keep them on, right? Recovering some of those payroll costs. Up to $1,375 per employee per month for a period of 3 months. What they came out with at the end of the week, and again, I don't have all of the answers related to this right now because they haven't released it, but what we do know is that they've announced there's a 75% wage subsidy, which will recover 75% of the payroll costs for up to $847 per employee per week that we're able to recover. So the idea would be that you would need to pay them 25% more than that. And when you pay them 25% more than that, you would get that $847 per week per employee. They came out yesterday, our Prime Minister came out and announced that you will, as a business owner, if you are determining whether you're eligible for this, you will have to demonstrate a 30% decrease in revenue. So the businesses who, we have some wonderful local businesses who have pivoted and have manufactured, different cleaning supplies or hand sanitizer, if those are businesses where there hasn't been a reduction in revenue, they wouldn't qualify for this 75% wage subsidy. So that's one thing to keep in mind. We have not been provided with additional caps per employee. We're looking at this being a 90-day transition. That is what we have available to us right now. So we're expecting to continue to learn more. We're expecting to learn more today because they've promised us by the end of the month that we would know more, but it hasn't been made available as of yet. What we did learn last week as well is that the government announced a $40,000 interest-free loan and indicated that 25% would be forgivable if you qualified, and that the government would back and secure these mortgages. So we did find more information out this morning through our contacts through the financial institutions, which again, I don't believe has been released. I just checked earlier to just confirm everything. What I have been informed of, though, is that these $40,000 interest-free loans, you will be needing to apply online through your online banking, and you will have to demonstrate that your business had greater than $50,000 of payroll in 2019 and under $1 million in payroll in 2019 in order to qualify. So if you have more than $1 million in payroll, you're not going to get access to this $40,000 interest-free. If you didn't have any payroll in 2019, you're not going to gain access to this either. So they define that very clearly from the banks today. They also talked about, though, on a positive side, that this interest, or that this loan, this $40,000 loan, is not going to be repayable until December 31st, 2022, which is extended longer than what I thought it was going to be. During that time, there are no principal repayment requirements, and there is no interest on that loan until December 31st, 2022. So that's a pretty important incentive for people. They also made it very clear that that $40,000 needs to be used towards qualifying expenses, but he kind of mentioned that he expects us to be faithful in this journey. And so what the $40,000 needs to go towards is payroll expenses, rent, mortgage payments, insurance, any sort of fixed expenses that would be incurring outside of your business. They don't want you to take the $40,000 interest-free loan and pay yourself a shareholder draw or an owner draw and take that money for you personally. The other interesting piece about this is if you are to repay, and we believe it's the $30,000 by December 31st, 2022, they're going to forgive $10,000 of this loan. So again, we're going to get more information related to this, but that is what I received as of early this morning from the primary banks, which is great. The other access to capital that we have, $10 billion has been announced from BDC as of a few weeks ago. That $10 billion is going to be used for working capital in businesses, and it's going to be unsecured. And I can vouch for it because I've also applied for this. It's at 3.3%, which if you've ever worked with BDC, they aren't known for lower rates. They're known for helping provide funding over longer amortized periods and providing funding that maybe the banks wouldn't otherwise be able to provide to you. They have 3.3% loans that are available. And if you're looking for up to $100,000, you can apply for the BDC loan online. And I can also vouch for the fact that before this whole COVID situation happened, I went through to experience it, applied for the $100,000 loan, and within 10 days had that money inside my bank account. I can also tell you from my experience right now, as someone who's proactively promoting getting access to cash resources, I think this is a really good opportunity for many people. I went out and requested additional funds from BDC, and within the last 10 days, I have been fully approved, signed the documents, and within the next day or so, we'll have access to those funds in my bank account. So BDC, although they might be overwhelmed right now with the number of applicants, are doing a really good job of turning these funds around and getting them into the hands of the business owners. So just so you know, from my personal experience, that has gone very, very well. Personal and business loans. So what I can tell you is that the government announced that they were working with the 5 primary banks, looking at deferral opportunities for personal mortgages and for business loans inside your company. What I have, again, I would encourage anybody to apply for this sort of deferral for a few reasons. One, just making sure that we have access to these cash resources, I think, is very important. And two, there's been a lot of discussion around whether or not this will have a negative impact on your credit rating. I have spoke with the vice president of one of those primary banks and discussed, the impact that this would have on a credit rating. And I was informed that unless the bank puts you on a delinquent payment schedule, identifying that you're not making payments intentionally, that that's how your credit rating would get bumped, would be if you fall in that. And my understanding is from them that anyone who's making proactive requests and getting deferrals outlined in their banking would not be subject to these negative credit ratings. It would not go on a delinquent report schedule. So I've been provided that. I think that's super important. What I have I have not received personal banking deferrals as of yet, but I did request for business loans outside of BDC and with BDC, and have received 3-month deferrals on my business bank loans. And with BDC, I have received 6-month deferral on principal payments with BDC as well. So I'm telling you that I've done this. And if you want access to that or access to that deferral, make sure that you reach out to your account manager at your primary bank or at BDC sooner than later, because they are going to be overwhelmed with requests related to this. So that has been super helpful. The Bank of Canada, as another resource, has reduced their interest rates down to 0.25%, which will continue to follow that. Borrowing rates will continue to drop with the banks, so that any of the additional funds we do need from the bank will continue to be loaned to us at lower interest rates, which is extremely helpful right now. It's not helping our Canadian dollar value, because if anyone's been paying attention to our Canadian versus US dollar, we're dropping quite significantly, but it's because of the Bank of Canada interest rate reductions to help us that our dollar has had a bit of an issue. Thought this was valuable for many of the innovation cluster and professionals who are out there. The student loan program has indicated that there will be 6 months of interest-free, loan-free payments related to student loans. I think that's very valuable, especially for anybody who's dealing with, past student debt. So just keep that in mind. The Canadian Emergency Response Benefit. So this is the new EI program that they've identified for self-employed people or people who have had to leave work voluntarily because they've become ill, or people who've had to leave work voluntarily to take care of their kids or of a sick family member. Where you normally wouldn't qualify for EI, the Canadian government has established a Canadian Emergency Response Benefit. This is another program that we don't have all the information for. They're promising that they're going to release more information once we get into April. We're almost there. They have indicated right now that if you want to pre-register for this EI program, that you go on your Canada Revenue Agency My Account, and you can pre-register on there and get your name on a list so that when this application does come out, that you are informed and you are one of the first applicants who goes through. So here's what we do know. They're looking at providing up to $2,000 per month for a period of up to 4 months related to it. We're not sure the qualification process, how much income we have to demonstrate in order to be eligible for this money. One piece of information that we have received is it sounds like there has to be some sort of employment income or self-employed income in 2019 for a minimum of $5,000 to demonstrate that you're eligible for this. We're still waiting on more clarity related to this, but if you're a business owner, like many that we work with who are receiving dividends, we might have to look at creating some self-employed income on your 2019 personal tax return to ensure that you're eligible for this money. Again, looking at 2019 personal taxes, they have deferred the income tax filing from April 30th to May 31st. One thing to keep in mind, though, is that this is a tax filing deadline that we have to fall within. However, if we're looking for extra benefits or we're looking to substantiate our 2019 income, we're going to have to make sure we file these returns sooner than later, because the government's going to be looking for information that's on those tax returns to give us access to these programs. So another thing, deferral of HST payable. This one just came out late last week as well. Any HST that is now payable, I think they backdated it to March 15th. So any HST that was going to become payable after March 15th is now not payable until June 30th. They extended the payment deadline. They have not, as far as we've seen, backdated the filing deadline. So it's super important that you continue to file on time and that there is a deferral in payment, but continue to file as necessary. Personal taxes owing have been deferred from April 30th to August 31st, which is really great. So there is a personal tax deferral again until August 31st. So anyone who would pay installments or otherwise would be making payments by April 30th do not have to pay until August 31st. Same goes for any business corporate taxes that are owing. Any corporate taxes that were owing after March 15th, they did backdate that from March 18th, is now not owing until August 31st as well. This also includes installment payments that you would otherwise be making. You no longer are required to make those installments, but just know that they will be due August 31st, so be prepared to have your cash resources available to make those payments. Two last ones, guys, here. Child benefits and personal GST credit incentives have been created through the Canadian government. The people who are eligible to receive these increases are people who fall within a low family income. And what we need to, again, be diligent on is filing our 2019 personal taxes, because those benefits tend to come out in July based on 2019 filing. So don't extend your personal tax filing too late. Make sure you're getting those done early enough so that you get access to these credits when they become available. And the last thing, that we can kind of report on from government incentives and resources that are available. For any farm businesses that are out there, additional funding has been made available through FBC Canada, which is essentially a financing institution dedicated to farmers. So just like BDC, FBC has been allocated more resources and will be able to help you with increased financing and working capital. That was a long spiel, but there are a lot of resources. They continue to change, and we continue to try and stay up to date on every single one of them. So I have a few additional resources that are outside of the government that I just want to give you guys access to. One thing that I have a free book. This is a book that I wrote in 2019. It's called The Wealthy Entrepreneur. A big element of this talks about planning out for future success in your business. So when we're talking about our model and understanding cash resources, understanding your financial model and planning for the future, all three of those things are part of this book, and I'm giving it to everybody as a free download. Utilize the resources in this book and make sure that you're applying them and that you're implementing new strategies in your business to ensure future success. For sure, that will be a great resource if you're looking at strategic planning going forward. Secondly, as you know, related to the government resources that have been continuously coming out, I have been creating videos that everyone can understand around the clock inside our free Facebook group. It's called Vision to Results for Entrepreneurs. We're updating on every government release when it comes out. Again, providing videos and easy to understand tips and tools in there. So if you're looking at a way to stay up to date on what's available to you, make sure that you join that group. And we would love to see you in there, and we would love to see how we can help you and your business and any of your colleagues get through this, because we are going to get through this together. Also, you know, there's our website. We've got resources in our business. We're happy to help. Email me if there's any questions. I'd be very excited and happy to help in any way that I can. My email is a little backed up right now with everything that's going on, but certainly will either personally reach out or have someone from my team reach out and answer any questions you may have. So what I want to do now is I want to open it up, because I know in this time with all of the resources that are available, a lot of people have questions, and I would love to be able to answer any of those for you now.
All right.
If that's good, Alana, like, is that a good time
perfect.
to open it up?
Yeah, so anybody with questions can just put it in the little chat box on the right of your Zoom session. I do want to reiterate that this is all going to be recorded, so you guys will receive copies. So yeah, you guys can just pop your questions in there now, and then Bob will be able to see them.
And so one thing I'll say about, so this, we're all waiting for this 75% economic release on the payroll subsidy. I do feel like it's going to be a really great opportunity for everybody who would be eligible for it. What we're going to be doing at our team is coming up with an implementation plan package for people who might be eligible for multiple resources through the government. What we're going to do is create a package here in the next week or so that, you know, if you feel like you're eligible and you want us to make sure that you're maximizing the opportunity and helping you get the resources you need to file for these different grants and different incentives, we're going to be providing that as well. Again, you know, this is a time, not too many times in my life will anyone want to be hearing from the accountant this frequently. It's one of those times where we certainly have a lot of expert resources and guidances that we can help provide. And here's the thing, I want everybody in this community to get through this and succeed together. And I know we will, if we all proactively make the changes we need in our business and address, you know, some of the government assistance that is available to us. So let's continue to act quickly, be strong leaders, and work together to get our community through this. All right. Lola, my friend Lola, I hope you're wonderful today, Lola. What about contractors who work part-time and are not on payroll? Do they qualify for a subsidy? So if you're speaking to an individual who is a contractor and what subsidies would they have available to them if they're self-employed. That $2,000 per month subsidy would be an EI program that they're going to be eligible for that they wouldn't otherwise be eligible for. Again, we don't have all of the details related to this. We do know that they are going to have to generate and support some sort of earned income in 2019 to qualify for the program. We're not sure, if the income's not high enough, if you qualify for the full $2,000 per month. At this time, it seems like we will, but we're waiting for the federal government to release more details on that. So that is the program where get onto your My Account. If you don't have access to My Account on Canada Revenue Agency, get on there, get registered for it, because you can pre-apply before the actual program is released to make sure you get on the list to get access to that as quick as possible. What if you have paid yourself through dividends rather than payroll? Are you still eligible for the $40,000 in loans? So, John, good question. So if you are a business that has not paid payroll, right? If you're your only employee and you did not pay payroll to yourself over $50,000, from what we understand, you won't qualify. Now, you could go back and retroactively give yourself a payroll change. But one thing that they've made fully aware to us is that if you don't have a payroll account registered in your business, I believe the date was March 1st, that you wouldn't qualify for that. And the same goes for anyone who has employees who are being paid over $1 million in total, right? Like I know with the 20 members on our team, we're real close to that. So if we were to be over that $1 million number, then we wouldn't qualify for that loan either. So yes, the dividend situation is something that we're actively considering. And as soon as we know more about how these programs are going to work, we're going to be making, again, on our Facebook group, we're going to be making sure that we're announcing strategies that people can implement in their business to gain access to those loans. Hi, Kristen. You have a question. We have a seasonal business. Should we be marketing aggressively now because construction is considered essential? Good question. I think, I don't know as though I want to say you should or shouldn't be doing it one way or another. Seasonal business, if, you're getting into that seasonal time of year where you're getting active in your business and you are considered essential right now, who knows whether you'll be considered essential next week or the week after. So we're kind of living on a week-to-week environment right now. For sure, if you have the opportunity to market your services, for sure, it's an opportunity right now. What I can tell you, and Rose might be able to share some of her insights on this as well, but the cost for Facebook advertisements has drastically dropped. The cost for pay-per-click advertising has dropped because people who are marketing right now are reducing their investment in that. So because people are reducing their investment in marketing, there's less competition, which creates better opportunities for people who are investing in those type of advertising. So with that, if your business is going to continue to be essential and you feel like there's opportunity because some of your competition is maybe not doing that, then maybe there's an opportunity for it. But here's what I do know is that, and I was talking with a client of ours who unfortunately was told that they had to shut their doors because they're in the health field. And we were talking about all their employees and the fact that they had to lay them off. And of course, the employees completely understand that that's the case. But what we were talking about is the fact that they have an opportunity now to become the voice in their market, to go out and find, whether marketing is paid marketing or just, on the pavement, working hard, trying to utilize some of the free resources. Marketing is certainly a good opportunity, one, to show your leadership in your industry, but two, because everyone is very captive on their phones right now. So anyone who's not taking advantage of that type of marketing is missing out on major opportunities. So here's the other thing I know. As hard of a time as business owners are having right now, your competitors are sitting there and they're having difficulty just like you are. And some of them, might be close to retirement or have been looking at selling that aren't going to continue their business beyond that, right? If there's someone who's been considering retirement, right now is a really good time for them to say, "Yep, that's a good time for us to wrap it up." So what you're going to have is this increased market opportunity to go out and capture new audiences in that climate. So Kristen, I think that's a long-winded story that's not giving you a direct answer, but I think there is a lot of opportunity for marketing right now. Lola is asking a follow-up. So what is the criteria for the 30% decrease in revenue? How is it measured from previous months or previous years? February and March are highest months. I'm doing great, thanks. No camera today. Okay, good. Thank you, Lola. We don't know. Prime Minister Trudeau came out yesterday and indicated that it was going to require a 30% decrease in revenue. We're not sure how that's going to apply, whether it's March from February, whether it's March to the previous year. I think of someone like our business who, we've staffed up and we've planned for significant growth. Is there a way for us to justify that we've lost 30% of revenue because businesses have dropped off? I'm not sure. And again, that's going to be part of the criteria that Prime Minister Trudeau is going to be releasing, and maybe Finance Minister Bill Morneau will be releasing. So we're going to continue to keep everyone up to date on that. I know that that is a very important one as it continues to come out, both the loan and the 75% wage subsidy. So we're going to continue to report on that as soon as we know. How can we handle, this is Maya, hello Maya, how can we handle HST still owing for 2018? So we've seen mixed messages. At one point, we were under the impression that HST owing will be deferred as well. I think what I might have to do is come back to you with what's actually happened now and let you know how that's working. But here's what I do know. I do know that the CRA interest rate has been 6% on balances outstanding. I know that they're reducing that right now. And I know that the auditors and the collections department of Canada Revenue Agency has kind of said, if we're going after anybody, it's going to be after the next month or two. We're going to take a break on that. So the collections people will probably leave you alone. And if CRA, even at a worst case scenario, is charging you 6% on HST that you owe, it might be a great opportunity to hold on to those resources and pay the 6% interest on that loan at this time. You get to make your own decision, but even if they aren't waiving any payments or interest on that until August 31st, like they are with many others, I would still say if cash is very important to you right now, hold on to those resources and just know that you might have to pay a little bit of interest to Canada Revenue Agency. I'm going to go down to Carlo. If you own the business but pay yourself as an employee, do you qualify for the Canadian Emergency Response Benefit? Again, Carlo, we assume yes. Whether you pay yourself as an employee or whether you pay yourself through dividends, the way that we understand it will be that you will qualify because you wouldn't otherwise qualify under an existing program. Again, that is one of those programs. Get on the My account through CRA, get on there, get yourself registered and apply for it. We'll know more in the coming weeks what the eligible criteria is for everyone to gain access to this. But my guess would be in some form or fashion, we're going to have to show that our income sources have dried up, and that would qualify us for this $2,000 per month under this new EI program. Okay, we've got Rob. Hey, Rob, if you're incorporated and pay yourself as an employee, then lay everyone off but yourself, and your business drops 30%, would you still be eligible for the 75% wage subsidy? And how are they going to figure out the 30% loss of business? You know what, Rob, great questions. How are they going to figure out the 30% loss in business? I have no idea. My guess is that what's going to happen here is they're going to be doing this on a self-assessment basis, and that the CRA may have a program in the future, probably within the next 12 to 24 months, where they're going to go back and review people's businesses and see if they actually did decrease over the year, and it might be on the business owner to substantiate why they've claimed that 75% wage subsidy and justify that 30% decrease. So that's all we know at this moment, but we expect that we're going to hear more details related to it. Obviously, they're delaying because of the complexity related to how they're going to figure this out, because if they just tell everybody that you're eligible for the 75% wage subsidy based on the honor system, there's going to be a lot of people who break the honor system. And there's going to be people like me who are going to be planning around the honor system for their clients to make sure that you gain access to this eligible 75% wage subsidy. So they're going to have to put something in place that's very specific, and I'm not sure what that is just yet. If you've laid everyone off and you are still on payroll, yes, you're going to be eligible for the 75% wage subsidy. It will be solely based on your wages, and you will be capped at that $874 per week per person subsidy. So, if we're kind of thinking out loud right now, one idea would be, and the government has structured it this way so that we are thinking this way, $847 that you're going to get in a wage subsidy right now is going to be better than that $2,000 a month that's going to be in that EI program. So if we all have ourselves on payroll and we've gone down 30% in our revenue, we continue to pay ourselves as employees, we are going to receive that 75% wage subsidy, at least how I can tell right now, which will be better off accepting that and receiving that than opposed to filing for that EI for self-employed. So again, we're going to continue to come up with planning ideas related to this as soon as we know more information, but that's something that I've been mulling around in my head as well. Marg, is the 75% subsidy taxable as income to corporations? If we do not take advantage of the subsidy and need to lay off employees, do we issue ROEs, and is it up to the employee to decide if they're applying for EI or the CERB? Yes, 100%. I'll answer that in sequence. So the 75% subsidy will be taxable. 100% it will be taxable. The tax rate is 13%. So 75% less 13% tax is still a really good number. So I wouldn't defer taking advantage of this opportunity for paying tax on it. But yes, we will have to. Here's the thing too, guys. If we're looking at this subsidy as 75% wages, if we have no income coming into our business, then laying off employees is still the only option we have. Right? Still paying 25% of employee wages if we have no income coming in, it's a really tough decision. But, if you put yourself and your business in a position that there's, you're not able to recover from this, then, you're doing a disservice to your business. You're doing a disservice to your customers, and you're doing a disservice to your employees, because now they're going to be looking for a job after this. So this subsidy is purely for people who have seen a downturn, and are still able to operate some, if not all, of their business and are eligible to receive 75% wage costs. Again, this is not for people who have been told they have to shut their doors. And maybe part of it is, right? If you've still got yourself on payroll and you've closed your doors, then yes, absolutely, let's look at applying for this and taking advantage of it. But if not, again, this is not a decision. We're going to keep the place open and have zero revenue because we're going to, continue to subsidize our employees with this. That's what the EI program is for. So again, Marg, I would say, yes, if your business is closed and you want to take advantage of, the EI access to EI for employees, yes, you have to lay them off. Yes, you have to file records of employment. Records of employment need to, if you want to expedite it, they need to be filed online right now, which is quick and easy. And the comments that we've got through our discussions with Service Canada, who administers the EI programs, have said, do not put comments in your record of employment because it will only delay the processing of your employees' EI application. So, put in there shortage of work as the category, and do not put comments in there as to reason why. Just leave it blank and file that way. I think Rose was talking there. This is Rose. We do have a marketing workshop coming up next week. If you'd like to register for that, it will be addressing marketing strategies. Absolutely. And here's the thing, if we've got time in our businesses right now because we're not delivering service, now is the absolute perfect time. And you know what? We might have never got this time otherwise. So it may be a blessing in disguise that we can actually focus on strategy inside our business, focusing on planning out goals and objectives for our business, focusing on marketing strategies inside your business, maybe getting access to new sources of marketing tools that you wouldn't have otherwise tried because you never had time. This is an opportunity, guys, to use this, uncertainty in being closed in your house. If you can't deliver, to focus on strategy in your business and how you recover from this, not only recover, but thrive from this in the very near future. Karen, if you don't claim a salary from your business, do you qualify for the emergency response benefit? That's the $2,000 per month. We're still not sure. It sounds like there will be some sort of earned income requirement that you will have to file on your 2019 tax return. But here's the thing, if you aren't paying yourself salary and you've been paying yourself dividends, there might be an opportunity for you to claim self-employed income for a $5,000 management fee or whatever the threshold is on your 2019 personal tax return. Claiming that income is considered earned income. It's very similar as characterized as a salary. It would qualify from what we can tell. Again, sole proprietors and partners are eligible for this program, which means that their partnership and self-employed income is qualifying for them for this. So if we are putting a small amount of self-employed income on our personal tax return and we're charging that to our company, that is something that might allow us to become eligible for these programs. Again, we're going to be coming up with these strategies and these tax planning tips as we gain access to more information. Justin, my man, Justin Christensen. He just says, thank you. Thank you for everything you're doing for our community. So thank you, Justin. I am happy to help anybody that I can right now. And I certainly have been working around the clock because I just want to make sure that everybody gets through this together so that we can all prosper as a community afterwards. And I know we will. It's about, again, taking action and making those decisions we don't want to otherwise make and planning and executing on our future strategies. So we will do this. We will do this together. Again, I'm here to help in any way for anyone that I possibly can. Our Facebook group is a great resource for information. I will continue to put videos in there every single day, Justin, and I do very much appreciate your comment that you appreciate the effort, and that will make sure that it continues, and I'll see this through to the end with everyone. So Diane is asking, can you apply for more than one of these programs? How do you know what would be the best program for your business personal? Diane, that's a great question. Because we don't know what is going to be the criteria for that $2,000 per month for the emergency response benefit, we're not sure if that allows you to qualify in a different way. I assume that any other EI program, if you apply for that, would make it null and void. So you obviously want to see what the EI payment would be in a best case scenario for you. And again, we're going to continue to work on tools for that as soon as we know what the criteria is for the emergency response benefit. And how do you know what would be the best program for your business personal? This is my 2 cents and my guidance and my advice on this. Everyone should be asking their banks for deferrals on the loans. We've got criteria and documentation that suggests we're not going to have a negative credit rating response to this. So now keep in mind, if you're doing it over and over with multiple banks and institutions, they might be doing a credit search on you. If you're doing multiple credit searches, it might have a negative impact on your credit rating. That's kind of to be determined. But if you need access to that cash or those deferrals, this is a priority number one right now. I would be asking my bank for any increase in line of credit, any increase in credit card, any access to new loans. I would be going to the banks. I would be asking, I'd be going to BDC, applying online for that $100,000 loan. BDC, to gain access to that, you have to show that you were financially successful prior to COVID, which would mean financial statements and tax returns from the past that would show that you were making money. Again, BDC was given very strict guidelines from the government that this financing is not available to help people who have never made any income. That particular financing is to help those existing businesses to continue to succeed. So I would be going after that. I would be looking at that government-backed loan for $40,000. If you have more than $50,000 in payroll, definitely apply for that as well. If we can get 10% of that loan forgiven and not pay interest on any of that loan for the next couple of years, why wouldn't we utilize that and repurpose it to pay for our rent, commercial insurance, property tax, payroll costs, anything like that? So definitely take full advantage of that when it comes out. And then the last would be just looking at the EI programs and determining which one is going to give you the greatest value. What I can say is that I believe that $500 per week and $2,000 a month is a pretty good value. If you were an employee somewhere else and you were paying into EI, you're going to have to apply for EI through that program because you qualify. If you don't otherwise qualify, then you're going to possibly apply for the $2,000 per month. And again, we're supposed to be getting more and more information on this program, and it's supposed to be coming out in early April. But here's my take on it too. They're trying to get out this 75% incentive to all companies to bring people back, to give them incentive to continue to work if they can, so that it will alleviate some of the pressure on the EI system and on the EI processing right now. So they're trying to push that back to small business to get that off their plate, which I understand. And at the same time, with that 75% plan, they're putting off this $2,000 a month EI program until they can get the other program under control. So, I would continue to monitor that and look at that in every way possible. Let's see who else we have. Diane, I think I just answered you. So Justin, one question: with the 40K loan, do you know yet what the qualifications may be based on the sales decrease? I don't think I may qualify. So just wondering what we may qualify for. So great question, Justin. I think the banks are suggesting that, we can apply for this online without necessarily going through an account manager. And this is where Prime Minister Trudeau has kind of said, this is going to be based on, somewhat of a trust factor. If you qualify for this, we want you to apply. If you don't, we're going to come at you and we're going to be mad at you because you took money and you didn't qualify for it. So, how do we justify the 30% decrease? My guess would be, there's going to be specific time periods that come into question. It would be March 15th for a 3-month period. I would suggest that if we can take 2019 for the same period and show 2020 versus the same period, if our revenue is down 30%, we qualify. If not, we don't. I don't necessarily want to get into strategies of how we try and make sure that we apply. But I think the government's going to be pretty strict on the fact that this is here to support those that are being impacted by this, and it's not there for people who aren't. So if your business is continuing to thrive in this, and you've got a business that has increased opportunity based on the market conditions right now, you're not going to qualify for any of these incentives. And that's okay too, right? Because right now your business is thriving or it's being unaffected. These programs are predominantly built around the idea that it's for people who are supporting individuals who wouldn't otherwise be laid off, and supporting businesses who are struggling to survive. And that's why the government's giving access to these companies. Thank you. You're welcome. I am on my account. So this is from Connie. I'm on my account to check out the advanced registration. I don't see it. Do you happen to know where one would find it? Great question, Connie. I've seen images. Canada Revenue Agency, if you follow their Twitter account, they've been posting about it. I do not have a My Account personally. because we have represent a client access. So I don't have access to my account. It goes through my company, so I can't see it. So I'm not sure. I'm not sure if maybe it's not there. They did indicate it is there. And what I would maybe suggest is going on to CRA's account and looking, under the resources that are available. Maybe they can point you there. If not, what I will do is I will find that answer for you, and I will post a video in our Facebook group just to make sure that everyone's got direction on how to get access to that program. So Marg, we are totally shut down with no revenue coming in. So it's 75% taxable at 13%. Plus we still have to pay CPP, EI, WSIB, and EHT. So the fact is it's much less than 75%. Plus we have approximately 80 employees on our payroll. So it's very high. Marg, I would love to reach out to you and connect with you and see how we could strategically make this make sense for you. I totally understand where you're coming from, and trust me when I say, the 75%, I think it's a good program. It's much less, you're right, when we start taking tax out, and you have to be able to have the cash flow in your business to be able to continue to pay the employees, right? This is the one element of it that the CRA and Justin Trudeau aren't speaking to, at least as of yet, unless we're going to receive checks for that 75% from the government, which I don't believe is going to happen. I believe that they're going to continue to take it out of your source deduction remittance on the 15th of the month. And, you might be a year getting full access to that 75%. I'm not sure. That's our theory based on how they outline the 10% program. So again, we'll continue to provide information on that as it becomes available. But Mark, I understand 80 employees. I would love to connect with you and see how I can help maybe strategically position you to gain access to some of these subsidies. So please reach out to me personally. Kathy, thank you so much. You're so welcome, Kathy. Happy to help in any way I can. Jeremy Brooks, are you aware if non-Canadians can claim the 2K if they can prove that they will make a minimum of 5K during the 12 months after the application was filed? So, Jeremy, really good question. I don't fully have an answer for you. My guess is going to be probably not. And the reason is we've been provided some information that suggests that we have to prove our 2019 income. And, they're looking at putting this program out to the masses and aren't really looking for the people who this doesn't qualify for, unfortunately. But what I would say is, if there's a chance that you had a payroll account in your small business and you were paying employees' wages out of there, there might be an opportunity to gain access to some of the funds, but just not that $2,000 per month. Again, we don't know all of the information, and check out our Facebook group. As soon as we get access to that information, I will maybe speak to your point, because we just don't know if you will qualify as of yet. And I totally understand your circumstance, and it's extremely unfortunate because you've been planning and getting ramped up to go, and then this has happened, and we've got no substantiating evidence essentially to support that we've had this income in the past. And they keep focusing on past income as a benchmark for what's happening right now. I know in our business, again, we've been up over the last few months quite substantially, have hired people on in order to deliver on that new income. But because of this, have seen, a setback in efficiency and in overall growth with our business. So, I feel like even though I've staffed up and I've taken on additional costs, I don't think I'm going to qualify for these programs either. And it's a real pain in my ass, to be honest. But I get why I wouldn't apply. And what I would say is if I can find anything that will apply for you, Jeremy, I will definitely do that for you. Vanessa Hogan, thank you very much. Appreciate your support. Karen, you're awesome, Bob. Oh, thank you, Karen. This is wonderful. Diane Rogers, could you go over the $40,000 loan and what costs you can use for it? Yes. So they've again, from what I received from the bank today, it hasn't been released, at least before this started, on the CRA website yet. This is purely from the bank providing me somewhat inside information to help people plan for it. It was indicated that the $40,000 loan could be used for payroll costs. It could be used for rent. It could be used for insurance. It could be used for property tax, and any essential costs related to keeping the business open. So that's kind of what they outlined. They didn't outline to me, and maybe this will come down from the Canada Revenue Agency and Bill Morneau later, if not today, maybe this week. It might be on disqualifying amounts, and marketing could be one of them. I'm not 100% sure, but here's what I would say is if we've still got a business that's going, we qualify for that $40,000 loan, we take that $40,000 and we put it towards payroll, we put it towards rent, and any of the cash that we don't have to use related to that rent and related to that payroll, we build up in another account, and we can use that account for marketing and other sorts of expenses. So that's how I would position that. And I think we've got Nicholas answering a question. John Gillis, for the CERB benefit, do you have to file your 2019 taxes before applying? Really great question. With the CRA and the Prime Minister coming out and suggesting that we have to substantiate earned income for 2019, I'm not sure how we would be able to justify it otherwise, to be honest, unless you have a statement of partnership income or sole proprietorship statements that we could justify. So I'm not 100% sure. Again, hopefully we know more details about that. There is going to be some sort of substantiating test for a few reasons. One, they want to make sure that people who are receiving that $2,000 qualify and don't qualify under another program, because if they're receiving the $2,000 per month, then it's higher than what they would otherwise access. That doesn't seem like a really great program. Also, if people weren't reporting that they were making any earnings before, how would the EI program justify paying out money to them because they've never had income before? So I'm not sure. Again, we'll hopefully get more clarity within the next few days. So Connie is saying from CRA on Twitter, you can get ready to apply online by setting up your CRA My Account now and signing up for direct deposit to get your benefit more quickly. So 100%, Connie, that's what they've been suggesting. I have been following them on Twitter, even though I'm not on Twitter very often. I certainly feel like their CRA is proactively announcing things on Twitter that they aren't putting on their website just yet. So that would be a really great resource to follow. Again, and I think that's the end of all the questions that I have. This has been wonderful. I am happy to help. My team is happy to help in any way I can. Jump on our free Facebook group. I will continue to update and provide strategies for everyone. It's free. There's no cost. I just want to help as many people get through this uncertain economic time as we possibly can. And I know doing it together, we will do that. So Alana, if there's nothing else, I think I'm done. I'm going to grab a glass of water and carry on with my day.